Well, a lot of people have questions when it comes to finance and investments. Gary Garrison with Asset Protection Wealth Management joins us to answer some of the more common questions that he gets. Gary, as always, so good to see
Ansley, it's great to be back. Thanks for having me.
Of course. So I have some of these common questions right here. Getting into the very first one is, should I get out of the market with the extreme volatility or stay invested?
That's a great question, and I think it really depends on a person's risk tolerance, how much risk they're okay with managing. The other thing might be, when do they need the money? Those are two issues that would dictate that. But if they're going to need a large portion of that money in the near future, maybe for a major purchase, you might want to park that somewhere safe and try to get a good interest rate on that. If you're in it for the long haul, for retirement, and you're not going to likely need that for a while, absolutely stay in the market. Ride the waves. It's going to happen. That's part of what goes with it, because they've done surveys and studies, Ansley, and if you sell at the wrong time, when the market does rebound, that's when you get most of your gain back, is right away, because it typically rebounds pretty strongly and pretty quickly.
Is there on average like how many weeks or months we can expect it to rebound, or is it always different?
It's always different, but it always does seem to be very quick and responsive. So just like, I don't know, a few weeks ago, we had that one day where the market was up 2,500 points after all the losses. That's huge. And so if you're out of the market, you miss those opportunities to make up some of the losses that you have. So if you're in it for the long haul, stay in it, and you will be rewarded for that.
You had mentioned that if someone needs that money now to maybe park that money somewhere safe,
yes.
Where would that place be?
Yeah, well, there's several options that we have. You can certainly buy a CD at the bank. They're paying pretty good rates. We have some investments, sort of money market type accounts at our office that are paying 4 to 4.5%. That's liquid anytime you want it. So look for somewhere that's safe and that will pay you a good interest rate, so that you're not losing purchasing power on that cash before you need it. But by parking it, then that money will be there when you do need it for this major purchase.
You can access it pretty quickly.
Pretty quickly, and
Okay.
the amount will be there rather than it may be crashing in the market.
Sure. Second common question says, when should I start taking my Social Security benefits?
Short answer is whenever you need to start receiving that monthly income benefit. Now, you can take it as early as 62 and up to age 70 is the last age. But the age that you really want to pay particular attention to is your full retirement age, which is, for most of us, is age 67 or somewhere close to that. And at 67, that's when you will receive your maximum Social Security benefit, or your full retirement benefit. So if you take it early, let's say 62, you'll get a reduced benefit, but that benefit will grow by 6% per year until you reach your full retirement age of 67. After that, it grows by 8% per year up to the age of 70. So it's really hard for people to know when to do that.
Yeah.
So our certified financial planning team have developed this report. There are over 20,000 calculations in it that will help you identify and determine, and it's for each person individually, it's not a cookie cutter plan, that'll tell you not only the exact year to take it, all the way down to the exact month to start drawing Social Security, so that you get the most out of it over your lifetime.
How is it doing this? Is it just asking you a lot of questions about your finances? Like how does that work?
Well, there's a few questions. We need to know a person's age or date of birth. We need to know what their income is. We need to know what their amount is, their FRA amount at full retirement age at 67. You have to, that's all they need, and then we can do all the other numbers. But you get that from the Social Security Administration, SSA.gov, and you go in there and click in there, and then you can find out what your full retirement monthly benefit is.
Are there pros and cons to taking out your retirement early at this 62 versus waiting until 60?
There are, and I think things to consider would be longevity and your current health, because if you're not in that great of health, you might want to go ahead and start it and start getting those benefits while you can. If you're married, let's say, to someone younger, you have to be married for 10 years for that spouse to receive anything, then it might benefit them if you waited and delayed it and got the higher monthly benefit, because then that person's going to get it the rest of their lives. So,
but if you don't,
things to think about.
Yeah, if you don't take it by 70, do you lose it?
No. 70
Okay.
is just the maximum age you can start drawing it, that it has gone up from the year before.
Gotcha.
And no one would ever want to wait past 70, because, it's already as high as it's going to go.
Right. Okay. Fourth question says, how can we be sure that our kids or grandkids will receive our IRA or 401k retirement accounts when something happens to us?
Yeah, and again, your spouse, your grandkids, kids, it could be a charity. Most of the investment plans that we design in our office have named beneficiaries. And named beneficiaries will designate and dictate exactly where that money's to go when something happens to you. Now, we have people that come in and they have wills and trust, which we love those. Those are great to have. And they'll have it all set up in their will or their trust who is to get what. But if you don't have the beneficiary designation correctly, the will and the trust won't help you.
Really?
And this has been followed all the way to the U.S. Supreme Court. Named beneficiary designations are the most important and legal way to leave money somewhere. So if you have a will and a trust and they say one thing, and you read your beneficiary designations on your IRAs, 401ks, TSPs, pensions, whatever, and that beneficiary says something else, it's going to go where your beneficiary designation says. So vitally important to review your beneficiary designations on your large investment accounts, life insurance, annuities, anything that has a beneficiary designation. Make darn sure that it's going where you want it to go, because it won't matter what it says in your trust.
That is really good to know. If somebody wants to reach out to you just for more information, Gary, what's the best way to do that?
Well, you can call or text 501-225-9045. You can even text and say Social Security report or SS report, and then our team will get back with you and get the information that we need. But I encourage everybody to reach out and get it, because it's complimentary, there's no obligation, and it's vital to know as you ebb and flow towards that age of 62.
Oh, absolutely. Great information from you as always, Gary. Thank you so much.
Thank you, Ansley. Great to be here.
We'll have more Good Morning Arkansas after this.